Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other global media, and founder of the world-acclaimed ethical sustainable investing information website Investing for the Soul. And please note my disclosure statement at the end of the podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast, Ethical and Sustainable Investing News to Profit By, for May 26th, 2019. Presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investment resources. Now to this podcast. And again, for any terms that are unfamiliar to you, simply Google them. Also, you can find a full transcript, live links, and often bonus material at my podcast page located at investingforthesoul.com/podcasts. The first item to discuss is CR Magazine's 100 Best Corporate Citizens of 2019. CR Magazine reviewed 1,000 US companies for their ESG practices. Robbie Locke, a writer for 3BL Association, commenting on the research results, wrote that Owens Corning tops the ranking, followed by Intel, General Mills, Campbell Soup, and HP Inc. 27 companies are new to the ranking in 2019, including Allstate, Delta Airlines, and Mondelez International. The biggest gainers include Ball Corp, CBRE, Ford, and Xylem Inc. Mr. Locke provides further clarification as to how CR Magazine obtains the rankings. Quoting him again, he says, "The 100 Best Corporate Citizens ranking uses 134 total corporate disclosure and performance factors in 7 categories: climate change, employee relations, environment, finance, governance, human rights, and stakeholders and society." Also, that and I quote him again, "There is no fee for companies to be assessed. To compile this ranking, information is obtained from publicly available resources only, rather than questionnaires or company submissions. Companies have the option to verify data collected for the ranking at no cost." Close quote. I like the idea that companies don't pay to be included in the research, and the data compiled is from publicly available sources. The 100 Best Corporate Citizens demonstrate various degrees of above-average corporate ethics, and ethics is a central theme for those wanting to apply their spiritual or religious beliefs to investing. If you're interested in applying spiritual or religious values to investing, Meredith Jones just published in MarketWatch a post that could be of interest to you. It's titled, "Opinion: When Your Faith Guides Your Investing Decisions, Can You Still Beat the Stock Market?" And she says the answer can be yes. Ms. Jones reviews the leading ETFs and mutual funds for investors interested in Catholic, Jewish, Muslim, and Christian Bible-related ethics and principles. For Catholics, she likes the Global X S&P 500 Catholic Values ETF, the LKCM Aquinas Catholic Equity Fund, and the Ave Maria group of funds. For those of Jewish persuasion, she says there's only one for now, and that's the Amidex 35 Israel Mutual Fund, which invests in Israeli companies. For Muslims, there's the Imam Fund and the Amana Group of funds, and ETFs listed on the London Stock Exchange, including iShares MSCI Islamic ETF and the iShares MSCI USA Islamic ETF. And under the umbrella of Christian Bible offerings, Ms. Jones reviews the Timothy Plan and Guidestone family of funds. For links to these funds, go to my podcast page for this edition at investingforthesoul/podcasts. Sorry, that should be investingforthesoul.com/podcasts. In my last podcast, I introduced the research of Tim Nash at Corporate Knights. Well, he's produced another research report that compares the pros and cons of investing in Uber and Lyft. You can read his full post under the title of Tim Nash's Sustainable Stock Showdown, Uber versus Lyft. Personally, I'm not keen on either company because I believe competition, not just between them, but also other entrants, including potentially motor vehicle manufacturers themselves, will force them to keep user prices low, which will continue to severely restrict profits. Also, their environmental benefits are overplayed, as I mentioned in my podcast of April 12th. Anyhow, this is what Mr. Nash says in conclusion. Quote, I'd put Lyft ahead by a headlight in this week's Sustainability Stock Showdown, but anyone that's interested in investing in either stock should be ready to fasten their seatbelts and brace for a bumpy ride. One big area that I know might interest you is renewable energy. I have several items of news and information that I want to share with you concerning investing in this area. The first thing you should know is that developments in new products are almost overwhelming. This industry has numerous innovative players, and it's very difficult to know who will eventually be a leader. Sure, you can buy renewable energy ETFs, and a good read on what to buy is an article that appeared recently on NASDAQ titled 5 Clean Energy ETFs to Buy for 2019. But if you're interested in individual companies, here's what I've seen in the past 2 weeks. The New York Times ran an excellent piece reviewing a Danish company called Ørsted. They produce massive offshore wind turbines whose energy costs are rapidly declining while already being highly competitive with new natural gas-fired plants. In solar power, there's been a tremendous breakthrough in producing new solar panels as well that appear to be 20 to 25% more efficient than the best existing panels. A paper outlining the breakthrough appeared in Science Daily under the title Breakthrough in New Material to Harness Solar Power. Who will manufacture, market, and install such panels wasn't mentioned. Incidentally, these panels do have a downside though. They contain some lead. I'm sure testing in rainy and humid environments will be needed, and manufacturing processes and end-of-life disposal policies will be required too, considering that most countries will want assurances about the safe removal of lead. I did a detailed study of solar panel manufacturers a few years ago and discovered that the manufacturing processes themselves can be highly toxic. Furthermore, most countries had no end-of-life policies in place to deal with the safe disposal of the toxic components of solar panels, and that is deeply concerning. It's possible that companies engaged in the manufacturing, marketing and installation of solar panels could at some point be hit with levies or fines in dealing with these issues. At the time of my research, I was most impressed with SunPower and its environmental efforts. So one thing you might want to find out more before investing in solar power manufacturers is how they perform environmentally. A great resource for this is the Solar Power Scorecard, produced by the Silicon Valley Toxics Coalition. However, their last scorecard is a little dated, and I'm hoping to see their new one soon. Incidentally, Fox Business News just reported on the huge growth of solar panel installation in the US in a post titled, 2 million US solar installations are just the start. By the way, a tip for checking how investment analysts rate solar companies, or any companies for that matter, is simply to type into Google search the name of the company followed by Reuters, the name of the media company, right after the name of the company you're looking at. Click search and then click the search item that says the company name you're looking at for and the text Reuters quote right after it. So after clicking on that, Reuters will then bring up a research report. Click on Analysts in the links bar to the right, and you can see how analysts rate the stock of the company you're interested in researching. By getting the information on how analysts rate the companies you're interested in can be terrifically helpful in deciding which companies to invest in. It saves you a lot of time and effort, and this is exactly the kind of tip and help you get in my DIY Ethical Sustainable Investing Pays tutorial. This tutorial will be the most rewarding 1 hour you'll ever spend getting help with your investments. Some other exciting new developments that might interest you are the following. Vanguard, one of the world's largest fund companies, has launched its first actively managed ESG ETF called Global ESG Select Stock Fund, ticker VEIGX. It will officially begin trading on June 4th. This is big, as ETFs are mostly passively managed. That is, they pick a group of stocks typically based on an index, whereas active management means selling and buying different stocks as the managers see fit. In recent years, passive investing has usually outperformed active investing and with much lower fees. However, who knows what the future will bring? Also, S&P Dow Jones, who have had ESG indices for many years, is launching something new. They are launching ESG global indexes based on core regional and country benchmarks. What is especially interesting is that these indexes, these ESG indexes, and quoting their press release, provide a return profile that's consistent with mainstream benchmarks that have been widely followed for years. And also, what you can do, where possible, is to review the indexes that interest you and see what companies are included in them. You can often get useful ideas for new companies to look at. So these are my top news stories and tips for ethical and sustainable investors over the past 2 weeks. Again, to get all the links or to read the transcript of this podcast and sometimes get additional information too, please go to investingforthesoul.com/podcasts and look for this edition. And be sure to click the like and subscribe buttons in iTunes or wherever you listen to this podcast. That way, you can help promote not only this podcast, but ethical and sustainable investing globally. And remember, I'm here to help you grow in your investment success and investing in opportunities that reflect your personal values. Please don't hesitate to contact me if you have any questions about the content of this podcast or anything else investment related. I can't say I'll have all the answers for you, and some answers I can't give due to licensing restrictions. But where I can help, I will. Now, a big thank you for listening, and please click the share buttons to share this podcast with your friends and family. Come again. My next podcast is scheduled for June 7th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link there for my do-it-yourself ethical sustainable investing pays tutorial. And don't forget to subscribe to my podcast using whatever app or site you get your podcasts from. Now, as I indicated earlier, I want to offer full disclosure. That means I'll mention in the show if I have any direct interest or holdings in companies or securities I'm talking about. Also, any favorable or unfavorable comments I make concerning companies or securities should not be considered investment recommendations. And furthermore, I cannot guarantee the accuracy or incur any responsibility or liability for any information herein. Please do contact me. I love to hear from you. I'm at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.